I remember how somebody shared a memory of Ben Graham's course, how he would open it with the saying that if you want to understand Wall Street, you have to study Spinoza, the philosopher. And he would say that you have to look at things in the aspect of eternity. And it gives me chills because I know that you and I are big fans of the infinite game concept, James Carr's. Tell me more about that, how you think about it.
I heard that opening by Marshall Weinberg, who's a dear, dear friend of Warren and Susan Buffett. And it hit me. I play it as the opening in the opening class.
Mm-hmm.
And when I heard that, I actually changed the mantra of the class. So SA is security analysis. So I say SSA 24 is our graduating set. SSA being subspecie aeternitatis, which means to see things under the aspect of eternity.
Mm-hmm.
What Spinoza was referencing there is not just a long time, but eternity, eternitatis, means to see the whole picture.
Mm-hmm.
And so like part of what we're trying to do as learners, as investors, is how do we see the whole picture without any blind spots?
Mm-hmm.
How do we see the truth?
Welcome to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest topic of all, money. How to make it, save it, keep it. But our conversations lead us to an even bigger question, what it means to live a rich life beyond money. My guests share their practices, principles, and evergreen wisdom. I'm your host, Bogumil Baranowski, author, TEDx speaker, and investment advisor to wealth creators with patient capital and an infinite investment horizon. I work with families and individuals who aspire to grow wealth over a lifetime and generations through disciplined, thoughtful investments in durable quality businesses while giving money meaning. Join me on this quest to unearth and share the wisdom of the ages. Let me share with you the podcast program disclosure statement. Blue Infinitas Capital LLC is a registered investment advisor, and the opinions expressed by the firm's employees and podcast guests on the show are their own and do not reflect the opinions of Blue Infinitas Capital. All the statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. The information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. None of what you're about to hear is investment advice. My guest today is Christopher Begg. Chris is a successful long-term patient value investor who seeks high quality. He's also a professor and teaches the Ben Graham Security Analysis course at Columbia University in New York. He also loves the ocean and water sports, especially surfing, which, from what I can tell, makes him an even better investor. How are you, Chris? So good to see you again.
Doing great, Bogumil. Great to see you. Great to be here.
I've been looking forward to it. Tom Morgan introduced us, I think, about a year ago, and we spoke a few times since. Tom is a great guy. And I got to hear your interviews with a couple of friends, with William Green, Sean Delaney, most recently, and I think last year, Lauren Templeton as well. I think Lauren was the first person that told me, you should talk to Chris. So here we are.
Excellent. Great to be here. And I'm thankful to Tom for introducing us, and those conversations with those three individuals have been a lot of fun. So I'm more apt to say yes to these things as they come up. So this has been something that we've tried to put together for a little bit. So thank you for being patient.
No, it's my joy and my honor, my pleasure to have you here. And as you know, I have some questions, but I know we're going to take it in all kinds of directions. I'd love to start at the very beginning, if you allow me. And I'm always curious about the childhood and upbringing and how you think that time shaped you. your relationship with money, and the career that you chose, or maybe the career that chose you.
It did choose me. Well said. um, yeah, I had a pretty, um, I say normal childhood. I grew up on kind of middle class in a little town on Cape Cod in Massachusetts, and my father was a CPA. My mother was a nurse, and from when I was a little kid, I just remember seeing my father get up and go to the office, and there was such responsibility in his task as a CPA, but he was working with individual clients, kind of helping them um, really solve their financial problems, whether it be tax problems, but just planning, advice. And I just loved the thought of, oh, someday I want to do that. I want to be in a place to serve others. So I remember I was about 6, 7 years old when I started going to the office with my father, and he would give me a stack of checks. And this is before, we've had electronic statements. And I would sort the checks, and I would get like $5 or something for sorting the checks in the order so that the bookkeepers can kind of organize. And from that, I just remember seeing numbers and being so fascinated by it. My father had this like parlor trick where he would kind of he could add up the phone book. And I was like, oh, this is so cool working with numbers. So from that early age, I just really loved the idea of solving problems for others, but also working with kind of these ideas of money moving back and forth and how it could create opportunity and freedoms. And investing came to me shortly after my undergraduate, where I was kind of exploring what I wanted to do. And of course, I was like, Dad, I'm going to do what you do. I'm going to be an accountant. And he kind of looked at me like, no, Chris, I don't want you to be an accountant. I really don't love accounting. I love helping others. And it was such an important thing he shared, because I said, oh, you're right. I kind of don't like accounting either necessarily from that standpoint. And I was able to kind of explore this path of investing. He had a partner that was really into it, and I actually ended up working for that partner, just kind of looking on and saying, this is incredible. I knew he wasn't the one to teach me what I needed to learn, so I quickly kind of looked around and got into the CFA program, and really I was lucky because I was able to sit at a firm that I was able to be an analyst, but also wear lots of hats. I could, there was a lot that needed to be done at that firm, and little by little, I could increase my time allocation to research and investing, and that's how I formed the kind of investor that I wanted to become. I was just sitting and reading and having that flexibility to do that there, and those were important early days.
I like that. I have a couple of questions. One is, I'm curious if you want to explore it, but the emotions around money growing up and the conversations you were having at home, since your dad was an accountant, I think there were more opportunities to talk about it. But what was it like? Was there a mindset of there's not enough? Or I haven't heard anybody tell me there's too much or there was too much, but I'm curious what it was like.
Yeah, there wasn't too much. There wasn't scarcity and there wasn't abundance.
Mm-hmm.
And that was kind of a nice sweet spot to be in, because my peers on Cape Cod were, we were there year round, right? So there was some seasonality to people coming in, but my peer set was what we were all the same. I went to a public high school, and we all had, kind of came from similar economic class. So it was just enough.
Mm-hmm.
And what I did feel good about in those early days is I always felt like there was a path for whatever I wanted to do.
Mm-hmm.
And I think that was important to know. If I wanted to work hard, I would be supported by my family to do that, to go on to college. And I think there was a lot of luxury there. And I look back and I'm like, we were very privileged in that sense, is that we had the comfort to kind of feel like things were safe and comfortable, but that path to meritocracy, if you worked really hard, that you could create something pretty wonderful, and that was always seeded very early. the dinner table and elsewhere.
Do you have any memory that you would consider that planted roots for loss awareness or risk awareness or maybe even aversion?
Mm. Yeah, it's such an important part of what we term value investing. And the thing that I think that always captured my attention when I looked across the landscape of different investing modalities, how you might solve this problem of investing, I always had this thought that thinking in terms of a businessman in running an investment portfolio that looked more like how a business owner might behave,
Mm-hmm.
how they think, how could we lose? What's the cash flow coming in versus the cash outlay? And so the more you think like a businessman, I think that you think about the potential for risk taking, of loss.
Mm-hmm.
These aren't just numbers on paper, but they're actually businesses. And what is the margin of safety that you have in that business, which comes down to the moat, the secular tailwinds the business might enjoy, how the capital is allocated on behalf of the business. And most importantly, what we learn is what's the price that we pay for that investment. If we pay too high a price, there's potential for real loss. And if you pay a discount for what we think it's worth, there's a margin of safety there. So those are all things that I think in those early readings, in those early days, it just seemed like truth. I was like,
Mm-hmm.
I'm in the presence of truth here. and the more I felt that, and I read anything else, I'm like, oh, that's less truth. Let's go in the more the direction of more truth.
Mm-hmm.
And that was always it would pull me. And those early readings of Graham and the early readings of Buffett and Munger, that was the bedrock of those lessons, right?
Mm-hmm.
And it still steers me today. That's what I call the rein and the rudder of investing.
Was it a straight path to Graham, Buffett, and Munger, or you had to meander a little bit?
There was lots of meandering. In the early days, I remember taking a technical analysis course,
Uh-huh.
which I remember just like, what is this? There was market timing, there was growth investing, there was
Mm-hmm.
all these things. And I saw these little fractals of success of someone
Right.
doing it well. There was a
Mm-hmm.
trader. He's doing that well.
Mm-hmm.
And I would actually I was very methodical in my learning, which has continued to this day. So I would have a 3-ring binder of who I thought were the best investors in the world. And anything I could learn about that particular investor, that style, I would add it to my 3-ring binder. And that had evolved. Actually, as that list of investors grew in my time in studying them, it would go so far as like the 13 Fs would file. And I would have a very detailed analysis of purchases and sales. I would kind of reverse engineer what was done and why.
Mm-hmm.
In the back of my mind, I'm saying, would I have done the same thing? Was the pattern recognition in my temperament such that I would have seen what that investor saw?
Mm-hmm.
And so as I did this body of work and meandering, I said, ooh, there's so many things I couldn't replicate. But the value investing from a number of key individuals, I said, I think I would have seen the same patterns.
Mm-hmm.
And that has continued to this day, but it was a narrowing, right? You start to narrow your path and you're like, this is my temperament. This is the scope of the type of businesses, type of investing, the time horizon that really fits who you are, right? And
Mm-hmm.
some people, they like to make money fast, right? Like, they see an arbitrage, they take advantage of it. They like to go long and short. All these things, to me, I was like, oh, I just don't do that well. And it doesn't feel good. So I kind of gravitated what really felt like it aligned with who I am.
You're very naturally patient, and so am I. And actually, people ask me, when you were younger, I'm 44, but when I was in my 20s, they asked me, were you more impatient and did you look for quick things? And I didn't really. And I don't know where it came from, but I always thought that I have time, that I can wait. Is that how you think about it? Or were you in a rush at some point and you kind of slow down?
I was in a rush. I remember graduating from undergrad, and I looked out there at what success was in my mind, and I wanted to rush toward it
Mm-hmm.
and have all those things very quickly,
Mm-hmm.
in the sense of like, you know, this type of car, this type of house, maybe this type of social reputation. And I think looking back, it's pretty normal. But
Mm-hmm.
there was a moment where I said, oh, why was I so in a hurry? I didn't have to be in a hurry. If I had done it a little slower. But that was learned through time and through, maybe even some mistakes. And then so I guess patience is sometimes a learned
Mm-hmm.
um, habit, as well as it is in your temperament to be more patient. Um, and there's certain things that I think I do to try to increase my potentiality for patience.
Mm-hmm.
Um, and 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 that's good. That's good. There's a lot there. Patience is one of the secrets, I think, of long-term investing is not getting in the way of the compounding that is happening. Like if
Mm-hmm.
you interrupt that compounding, and it may be an emotional reason, it might be you think there's something flashier out there, and you own something of really high quality that has this long, long run.
Mm-hmm.
Sometimes it's just best to just allow
Let
the
it.
compounding to continue. And yeah, so one of the things that internally here at East Coast is, we have an IRR target based on what we think the growth algorithm is, but also the price that is available today.
Mm-hmm.
And the IRR is kind of speaking to us every day. This is what your return is going to be over the next 10 years, if
Mm-hmm.
our data is correct. Um, and every once in a while, the market is kind of agreeing with you, and the IRR is all of a sudden low double digits, high single digits. And you're like, is this the time to sell and to reallocate, pay taxes? And oftentimes you look back over those moments, and you're like, had I gotten in the way of that too much, you really would have lost some of the magic, because those things are so rare when you
Mm-hmm.
find them. So patience constantly reminds me to not get in the way of things sometimes, and just allow the process to kind of work through. But it's something that I work on.
You brought up some labels, value and growth. And I'm very curious because when people really want to know how I would label myself, I say I'm a value buyer, but I want to be a growth holder. I really want to deal when I'm buying something, and I'm willing to wait for it. I want it to be, cheaper, prices down, the sentiment is negative. And if you look back, even at the businesses that we respect today, they had long windows when that really happened. Now, buying it, I always say that everybody can buy a stock, not everybody can hold a stock. Right? Everybody can go out and buy it. But in the holding part, which you bring up, that's where the magic happens. And I'm curious how you think about both the purchase, and I think you hinted how you think about the holding part. You just let it run. But do you look for a deal when you're buying? Are you looking for a bargain?
Yeah, it might be helpful to. I think there's an evolution to the arc of value investing that is important to kind of understand, because I think we label it as if it's one thing, right? And you said
Mm-hmm.
there's value and there's growth. Um, so when I think of value 1.0, I think of Ben Graham kind
Mm-hmm.
of buying a collection of assets at a discount to what they're worth. The collection of assets isn't necessarily growing, so the
Mm-hmm.
dollar that you're buying may be worth 95 cents in a year, maybe 90, maybe it's quickly, um, the value is declining. But if you buy it at a big enough discount, that you're really creating value
Mm-hmm.
for, 50-cent dollar. Value 2.0 is something that I think has been honed by, Munger brought this to Buffett, and now Buffett Munger have created this this kind of thought process of, I'd rather own a great business or a good to excellent business
Mm-hmm.
at a reasonable price. and a good to excellent business generates cash flow.
Mm-hmm.
Generates free cash flow that we ideally can see, and we can measure that cash flow against what we're paying. And so in this case, you may own something that is yielding to you a 6% free cash flow yield and growing that free cash flow yield over time. And so that value of what you're paying versus the growth of that cash flow creates a total return, which is, ideally is pretty attractive. And so we pay attention to that price we pay based on what we're seeing in current free cash flow. And the growth of that free cash flow is really important. So that was the first time that value and growth were combined, right? And and growth is it's just part of that discounted cash flow equation. Now, value 3.0, which is, I would say, is a slippery slope, right? Because I'm like, we're going into a terrain that is not as proven, and not proven in the sense that we don't have a Buffett Munger 55-year history that says this is the way to do it. But there are great investors that have bought excellent businesses that have long-term secular tailwinds, that have really, really understandable moats, layers and layers of moat. But the optical free cash is not something we can actually see, in the 10K and 10Qs. It's like, you got to do some work to see what the real earnings power of this business is. So the one that I always think of in this case is Amazon. Amazon in those early years, had you just looked at earnings, you might say, this is expensive. Now it's been perennially expensive. If you weren't doing some of those add back procedures to say, no, this is actually a really good value. And so we're seeing more and more of businesses that are value 3.0, where optical free cash may be lower than the true earnings power of the business. And you have to do some of this other work to understand it. And that's fun. That's really fun. And it's something that I am exploring this deeper with private equity investors, with some of the public equity peers of mine, to try to have better pattern recognition here. I think of Nick Sleep, who ran Nomad for years. I could consider him one of the first people to write down some of these principles around value 3.0. Bill Miller, it's a key part of some of the things that we do here. James Anderson and Bailey Gifford. I'm actually going to be moderating a panel in London in mid-September on this, and we have JB Straubel, who was one of the co-founders of Tesla, now running Redwood Materials, and I'll moderate a fireside chat with JB, and we have another panel on this kind of value 3.0 thought process, so I'm so curious about that space. That's kind of the evolution, I think, of it. We're trying to buy things where our 10-year IRR is above 15% on the price that we're paying. And importantly, that is a point in time estimate. But what I'm really trying to solve for is what I call a vector of asymmetry, where if my 15% IRR is kind of what I think the model is outputting, it's almost it's the asymmetric return that I'm interested in from that price we pay. So ideally, the 15 could be anywhere between 15 and 40. So the vector, you protected your downside. How do I lose? That might be moat, secular tailwinds, the operating excellence of the team. But you want the asymmetry on the upside to be things you're not paying for. But you look out and you're like, I kind of see this as inevitable. I see the direction of the business, this particular business, as providing additional upside that I'm not paying for. So we call these free call options sometimes. I like to almost call them these vectors of asymmetry where, I'm getting this other vector that's really, really interesting in this business that I'm not getting with another one that looks more bond-like, a bond-like 15% interesting, a vector of asymmetry where I'm getting 15 to 40, way more interesting. And that's where we see value 3.0 category names of having a much broader set of range of possibilities.
It almost sounds like a very dynamic view of the world. Like the original Ben Graham approach was very static, in you could look at it that way, as you were finding the dollar bills for 50 cents. He would actually hold a lot of them, very diversified. From what I know, he was not very interested in the business behind the stock. And he would realize that one-time gain and walk away. There was no real long-term holding. And I think it came obviously from the Great Depression era investing, where he learned a lesson, which was also a different Ben Graham from the decade before. And Buffett took some of those lessons, but he initially had a lot of success with that approach. And as you mentioned, Munger allowed him to progress. But you're talking about the next step, which I find fascinating, because you're looking at places where the value could potentially be,
Right.
not where it was.
Yeah. And I'm glad you brought that up, because this is well known, particularly among value investors. But, Ben Graham's history, and this really came out in, the 1948 edition of Intelligent Investor.
Mm-hmm.
But there's a postscript to the Intelligent Investor on later copies where he shares his history. And it was almost like a mea culpa. Like, everything I've written in Intelligent Investor is true.
Uh-huh.
And I did this.
Uh-huh.
However, the lion's share of my wealth creation and of my record is one company.
Uh-huh.
That one company is Geico.
I remember that.
Now, Geico, Bogomil, is not value 1.0.
No.
It might not even be value 2.0. I would say probably when Ben Graham bought Geico, it had a lot of value 3.0. The duration of that moat, the entropy reduction that Geico does in the marketplace on a daily basis compared to the agency model,
mm-hmm.
they've been devouring just little bits of entropy and friction over the course of decades now. And Todd is coming into my class this fall again. He's coming actually 13 years in a row now.
Wow.
Operating that business.
Mm-hmm.
Almost had to, give it life again, right? But when I look back, I'm like, Ben was doing value 3.0. We just didn't know. Mm-hmm. And it's really interesting.
So in that book, he actually writes it in the third person, doesn't he? He says there was a firm, or there were partners that made an acquisition that became, I think, half of his net worth at some point, or net worth of the fund. I don't remember, but a big part. And so I was wondering, because I brought up this point with Adam Cecil on this show, who wrote a book about what I would call, the value, beyond value 2.0. And I was wondering what the intention was, why Graham put it in. He could have just kept it to himself, but he had to put it in the book and mention it, right? Like, I always wonder, as a writer myself, like, why did I actually end up saying it and sharing it? And do you have some thoughts why he decided to share it?
Didn't it almost feel like a mea culpa? Like he was actually saying, I want to be truthful here. Everything here is still true. However, there's this other part of me in something that was a big part of my record. And Adam's a dear friend. And Adam was kind enough to credit me with the value 1, 2, 3 in his book.
Oh, yes.
Which is great. I've had Adam, I've actually worked with Adam, both professionally, and he's come into the class. So great. I recommend that book to all your listeners. It feels like he was trying to share a little bit of his real history. Mm-hmm. Now Ben was this polymath. Mm-hmm. The part of Ben I love is thinking about him in the south of France, translating Greek and Latin. And he loved investing, right? But he loved writing. He loved teaching. But he loved learning. He was such a polymath. He just loved the creative arts. And when he wrote that postscript, he was in the south of France, just kind of, working in these different modalities of life. But what a great soul, and we're lucky to have him being the father of this kind of body of work that we're in.
I think he wanted to be intellectually honest. You were talking about the truth, and he saw a certain truth, later in his career, and he thought, I have to share it. I don't know who's going to use it and how, but I have to share it. And I think that's part of, what you do, teaching. And we beautifully connected here our conversation to the fact that you teach the original Ben Graham's course at Columbia. So I do have to ask you what it feels like to be following in the footsteps of the legend.
Like, at times, going into our first class next Wednesday, and I always say I'm stewarding the class. It's like, how did you teach this class? I remember when Bruce Greenwald asked me to do it, and I kind of looked. I was like, I looked behind me. I'm like, are you asking me? And I'm like, do you want me to teach the book? Because the only thing I knew about security analysis was the book, the 1934. He's like, no, Chris, just teach what you do.
Mm-hmm.
I'm like, well, I could do that. That it's a privilege, but I always say it's a research laboratory.
Mm-hmm.
And I think of when Ben did the class, he was kind of coming up from Wall Street. He would put on this white, almost like lab coat, because he didn't want chalk getting on his suit. And he would just sit there and he'd talk about things he was working on.
Mm-hmm.
And for me, if the students are going to feel my authenticity and energy that I'm putting into it, it has to be a laboratory. It means it has to. Looking at our agenda this year, I want to bring the most relevant things that we're working on, right? We're thinking about both internally here or with investors that I'm talking to around the world, and bringing those investors in. That this can be a platform that they can share their experiences, their wisdom. I just spoke with Matteo Scaleri, who runs a great fund for John Elcon at Lingato, and Matteo hasn't been into the class before. He has this real passion for to wanting to teach, and so we spoke yesterday about what we're planning for class, and it's so fun because here's someone that has this desire to give back and share, and this is an opportunity to get in front of 72 of some of the top minds that are kind of going to leave the second year MBA and go into life. And what I try to do not just is to teach investment lessons and principles and give examples of investors and operators who have been really successful, but also try to share some of the values that I think success looks like, of not being in a hurry, right? Thinking long term, thinking win-win across the entire ecosystem and the counterparties of an organization. And I think by the end of the class, like, you see all these people and you're like, ooh, they all did it the right way. So that's kind of, I think, what continues to kind of motivate me to get excited each semester and to meet the new students. And I just got a batch of, one of the things I have the students do is I have them do kind of this kind of, they answer a number of questions. And so I get their resume, their picture, but I ask them all these questions about kind of see how curious they are, what they're interested in. And so I come into the class and I just have this, just be able to see these students from where they've come up to this point. And then we share this journey together. It's a lot of fun.
It sounds like nobody is in that class by accident. Everybody is there for a reason. There's a big intention. And I think it's even more fun for you to teach a group of young minds that are really there for a reason. And I think they can take it in so many different directions. There might be another Warren sitting there in the classroom.
Yeah, it's humbling to think. I mean, I probably have had now over 1,000 students, and each one I feel we planted a seed. And I'm never sure where the seed is going, if it's for their own success. But often I hear back and I see where they've gone. Sometimes we're collaborating, we're working together. My former TAs are kind of like this family. But it's been it's been a lot of fun to kind of see the different nodes of this network just kind of spread and expand and compound in ways that are, I don't know, it gives me so much joy.
Unpredictable, but fun to watch.
Absolutely.
I remember how somebody shared a memory of Ben Graham's course, how he would open it with the saying that if you want to understand Wall Street, you have to study Spinoza, the philosopher. And he would say that you have to look at things in the aspect of eternity. And it gives me chills because I know that you and I are big fans of the infinite game concept, James Carr's. Tell me more about that, how you think about it, because it's so, when you think of sitting there in the classroom, Ben Graham, so many years ago, talking about investments in the aspect of eternity, Geico is still around. Some of those businesses have become bigger and better. Maybe eternity is the right investment horizon. The infinite game is the ultimate game we should be playing, thinking about investing.
By the way, I heard that opening by Marshall Weinberg, who's a dear, dear friend of Warren and Susan Buffett. And it hit me. I play it as the opening in the opening class.
Mm-hmm.
And when I heard that, I actually changed the mantra of the class. So SA is security analysis. So I say SSA 24 is our graduating set. SSA being subspecie aeternitatis, which means to see things under the aspect of eternity.
Mm-hmm.
What Spinoza was referencing there is not just a long time,
mm-hmm.
but eternitatis means to see the whole picture.
Mm-hmm.
And so like part of what we're trying to do as learners, as investors, is how do we see the whole picture without any blind spots?
Mm-hmm.
How do we see the truth?
Mm-hmm.
Right? And the truth is not something where there's a true and a false. A truth it's like a movable feast, right? It's something that is kind of dynamic. It's moving through time, and it's if you read this one analyst report or this, it's someone's perspective on that thing. You have to go to the source
mm-hmm.
and understand it from all sides.
Mm-hmm.
And I think that's ultimately, the goal of a critical thinker is to think by first principles, to see it from all angles. That's, I think, what Spinoza, the beauty of that Spinoza mantra, which we've taken on for our course, and I've taken on as kind of like, that's a motto in a sense of my own. And but the long term is really important. And you mentioned James Carr's, finite and infinite games.
Mm-hmm.
Probably one of my proudest moments of the history is actually bringing Jim into the classroom, and it was he was in his early 90s at this point, and we were having lunch before our class, and he shared with me, he's like, Chris, I know you love finite and infinite games, but did you know that book was about 5 times the size of the one that you read, and it was an academic book, and I lost the manuscript when I was traveling through France, and I had to write it for the publisher very quickly. So I came back with all the ideas that were really important, and I wrote it very quickly. And it became this book, which is just so special and so beautiful. And I got to know Jim really well after that, and he was writing another book called The Poetry of Money when he passed away during COVID, and he sent me a bunch of chapters of that book. And we were having some real fun just back and forth on that. He's a special individual, and that the idea of finite and infinite games is so important. I think you can delineate being in a rush, playing a finite game, versus an infinite game where you really aren't thinking about finish lines. You're not thinking about that this is where I win. You want to choose games that I think you can play forever. And I think you and I have a love for the water, right? We have love for surfing. Whenever I take on an art, I'm like, is this an art that I could play forever? Right? Or like, I can get better at this art, and there's like this cumulative learning and mastery that's underway for you in that thing. So investing's great, right? You said, like, why did I choose investing? It chose me too, but it's something I could play this game forever. Assuming my mind stays, and Charlie Warren, a great like beacons here. Charlie literally at the top of his game when he passed away in August of last year, right? Just so rich and beautiful in his thinking, and Warren too. By the way, I think it's Warren's birthday today.
It is. You're right.
Is it? Awesome. So happy birthday to Warren. And
Happy birthday.
and now Warren now has accumulated. I think we sold Bank of America this week. He's got $280 billion of a war chest
Mm-hmm.
at the top of his game,
Mm-hmm.
with so much optionality in Berkshire. Berkshire's now $1 trillion market cap, right? I mean, oh, how beautiful of a path of mastery underway there.
And the only non-tech $1 trillion company, as far as I know. Am I right? Yeah, I
You're
think
right.
so. Yeah,
You're right.
really remarkable.
The law of large numbers. I was on a thread earlier today with a group of great investors that we do a retreat in Switzerland every year together. We call it the Long Walk Retreat.
Uh-huh.
And we're just, having a dialogue on scale. And, I think this law of diminishing returns should be challenged when you think of the nature of scale in a global world. And we don't want to get, I think there's this tendency to say, this is now $1 trillion or this is $2 trillion. But I think we could, continue to test those things. Like one of the most, like someone says, "Oh, that's a MAGA stock." That still gives me kind of like it's like nails on a chalkboard to me, because I think when you start filtering things under, I call it you collapse the wave function. Like the wave function is learning. It's dynamic. As soon as you label something, you collapse it. You measure it. You've observed it. It ceases to be this dynamic thing. And that's what I think the nature of language, not to implicate language it's an asset, but it's also a liability. So you have to be very careful of how language can actually collapse the wave function. It actually can distort your view or your ability to see truth.
I love that. I have so many questions. I did want to bring up something on the topic of infinite games. I manage money for families, multi-generational wealth, and I've been doing it for 20 years. And I realized what you brought up about the course, that you feel like you're a steward. It's a role of stewardship. Those families have had wealth in some cases for, 4, 5, 6 generations, and they aspire to have it over the multiple generations ahead. And you realize that the role we play, allocating the assets or picking the investments and stocks, building a portfolio, we play a role over a period of time. And hopefully for me, it's a long runway ahead, 20 years behind. Looking at Charlie, maybe I'm just getting started. I don't know, but we're playing a role, but it's a game that has no end. When you think of investing as not a place where you have winners or losers, as the media wants us to believe, this is the best manager of the week or the month or the quarter or the best stock of the day. What does it even mean? How is that helpful? But if you see it as something you can continuously build on, it completely changes the dynamic.
It's everything. One of the things I've always been curious about is I'm so curious about how the world works. And I think when you approach this journey that we're on as trying to ask better questions, right? And I think one of the things that this has been a topic of inquiry for me now for the last 6 months is this idea of the nature of query. And I think with any art that you're on are you converging on an answer, or are you living in a question? And the questions are really what I think drives this path of learning. And if there's one thing I had to interview for that I'm interested in people around me and in my ecosystem or here at East Coast, I just love an innate drive to learn and be curious, right? That sometimes it's not a trained thing. So the nature of inquiry and asking questions, Elon had said that he had this existential crisis when he was young, and because he read all these books, and he's like, geez, no one has any answers. No one has any answers until he read Douglas Adams, Hitchhiker's Guide to the Galaxy, and it opened his eyes because, in the book, it's kind of a comical book in the sense that the answer is 42. And the supercomputer spits out the answer is 42, but everyone's like, well, what's the question? We know that, I call it the qua. What is the question to the ultimate answer? that we on life, on everything in the universe. And so that is one of the things I love is keep asking questions, and driving. That's an infinite game for me. And that idea of passive curiosity lead to these different areas of learning and depth of learning, and plays into this infinite game. And joy, I think of the joys of compounding, the compounding of joy. Joy is revealed truth. When you reveal truth, whether it be a one-on-one interaction with another, you're revealing a deep truth that exists in the universe. And I think as we learn about things, we do experience this feeling of joy, this kind of ecstasy of this process. So it truth and question asking has kind of been a focus of my kind of understanding. I'll share this. Another thing is, when you think of, oftentimes when you try to converge something to an answer, most things that are interesting kind of diverge to a paradox. And the questions that we ask that diverge to a paradox, where there's multiple truths at work, is usually pretty common versus things that just converge and spit out 42. So I went a little off tangent there, but it's literally filling up all of my journal.
I love this because I think it's more timely than ever. We have AI that gives us the answers, and I think it's kind of a wake up call that the questions you ask matter more than we ever thought. And having gone through schools around Europe and then coming to New York, I realized, and I saw different systems, different schools teaching in different ways, but there was a big emphasis, especially in the first half of my education, on memorizing things. Remember the dates, the generals, and I loved history, but I was terrible at remembering the dates. I was just curious, why did this war start? How did it end? Why did they depose of the monarch? Like what was the context? And I wanted layers and layers. You talked about eternity as basically an understanding across all the layers. And it's kind of like investing, understanding how this business exists. How come they have $10 billion in profits? How come nobody else came in and took that, right? Like you start to ask those questions. But I think it makes me realize that going forward, and you're at the forefront of it with your students, you're helping them or teaching them to discover what are the better questions to walk away with, right? Because the knowledge might be less timeless, but the questions, I think they will be relevant. The questions that Ben Graham was asking in 1932, I think they're as relevant as they would be today in a classroom.
And I think this gets to mission statements as well, right? If you're an organization or a culture and your mission statement is a question versus an answer, like this is our mission statement, we've lined it out, we've figured it out, we've converged it, we've collapsed the wave function. But the wave function, if it's a question, like Tesla, for example, is, when you walk in, what's the culture of Tesla? It's like, how do we accelerate the transition to sustainable energy? And Bogomil, if you're an employee, try to find a few answers that lead us into another terrain, right? So I think reframing how you are motivating yourself or a group of individuals or a country or humanity under a question that can bring people in to the conversation for creativity, to reimagine what is possible. I think that's there's something to that.
And I like that part when you try to define something, you might be misunderstanding that. And there's actually a quote from a book that I know you like. It's The Zen and the Art of Motorcycle Maintenance. I'm curious if you ride motorcycles, you can tell me in a second. But in that book, the author says how to define quality is to misunderstand it. And a big part of what you do is the pursuit of quality, high quality. Tell me more about that. Do you ride motorcycles, by the way?
No, that would my margin of safety that is kind of more important than the thrill of a motorcycle. So on all my adrenaline sports, I usually where my crashes are at high speed on water.
This can hurt too, but yes.
Sometimes with an impact vest on or other things, but it's I admire people that ride motorcycles and they're really good at it. But no, I've never done it. But I love the book.
Mm-hmm.
And what Persig wrote there with Zen and with, more importantly, with Lila, which is the second book,
Mm-hmm.
is he was laying out a philosophy. And that philosophy he called the Metaphysics of Quality.
Mm-hmm.
And the Metaphysics of Quality is how, and he defined there's static quality and there's dynamic quality. And this is kind of gets to what we were speaking of before. Static quality is kind of, it loses its life, where dynamic quality is kind of the leading edge of the train
Mm-hmm.
that is advancing everything. Everything is manifesting ahead of. And I love businesses that lead with quality. When you lead with quality,
Mm-hmm.
we were talking about marketing, and marketing's kind of evolved, right? Like you have a return on invested capital on your marketing spend. When you are delivering quality, the product will market itself
Mm-hmm.
in a way, right?
Mm-hmm.
You as a person, I see these, Nick Sleep. I love that, that Nick and I shared Persig's work as some of our favorite work, and we love talking about it. But, if you do everything with quality, whether you are making a cup of coffee in the morning and how you make that cup of coffee, well, if you do it with quality versus non-quality, the
Mm-hmm.
feeling you have of that practice changes. And I think that's kind of like, I don't know when it was, but it became like a line in the sand. I'm like, I want to do everything with quality, no matter what. Every relationship, every hobby, how I might research a business. Like, what does low quality look like? What does high quality look like? And it's a completely different um, uh, number of tasks that you would perform to do it when you've done it with quality.
No, I love the sound of it, and I like the dynamic perspective, because we're looking for things or processes or situations or businesses or relationships that can get better over time. So the time is our friend. I think that's how I look at it, right?
Yeah.
So if you have more time, can it be bigger? Can it be better? Can it be, well, I say high quality, but then it means so many different things to different people. But is it worth the wait? That's how I would look at it. And I really like that. When you were talking, an image came to my mind, and I'll share it, but I'm thinking of, and you spend time in the tropics as I do. I picture this alt truck. It has big letters on the back, and 9 out of 10 times it says Toyota on it. The truck is loaded with plantains or pineapples, and the truck is probably older than I am, but it's always a Toyota. And it starts, and a happy guy drives it away to town and sells the produce. And to me, the quality of that car, it's the symbol and the pride of putting those big letters on the back of it. And that car being, almost half a century old and still driving somewhere in a climate that's not very friendly to cars. That's something that always reminds me of, a certain definition of quality, or expression of it at least. But that's what I'm thinking about. And it takes me to the following question, the water and the tropics, because you spend quite a bit of time in the ocean, and you and I talked about it. And I think it plays a big role in who you are, but also it gives you the refuge and inspiration. Maybe it's even meditative. Can you talk about that experience and how that helps you as an
Thank you.
investor?
And by the way, you mentioned my favorite vehicle of all time. It's like my dream truck is a Toyota Land Cruiser 70 LC79.
Uh-huh.
And it was like a couple of years ago where I finally was able to purchase my favorite vehicle of all time,
Mm-hmm.
4-door truck bed.
Mm-hmm.
And it's still one of my happy moments is just driving my Land Cruiser. So it's that is a sign of quality, and that's how you feel when you're in the presence of something like that has this duration to it, that has it's very special. And the water has always been part of the fabric of my life. I've never been more than a couple miles away from the water.
Mm-hmm.
And it just feels like it's part of the backdrop to feel like the salt air. Um, we have 72% of the Earth's surface is water.
Mm-hmm.
66% of that is deep water. And it's why the Earth is blue, right? You have this Tyndall effect, right? So when I'm in the water, I feel like I'm part of nature.
Mm-hmm.
And one of the things that you and I both enjoy is gliding on water. I mean, what a
Mm-hmm.
gift! It's like skiing for the first time. But when you catch your first wave, I don't care if it's you just got up and you're surfing for the first time, but like, oh my gosh, what an incredible feeling, exhilaration. But there's also like that flow state moment of weightlessness where the conscious mind is off and you are just completely in the presence of, aligned with nature, in nature, part of nature. And it's like that brings me back every time. And most of we spend some time in the jungle, as well as up here, in the northern latitudes. And it's such a gift to be able to experience different types of climates, different types of waves, and how you're enjoying. And it could be tiny ankle high waves, it could be double overhead, and 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 then the medium with which you're using. I love experimenting with kite surfing, or using wings and foils and skim boards. It doesn't matter. It's just all different ways to kind of glide and feel like flow states, and whatever the ocean's kind of giving you at the time. If it's waves, if it's wind, it's been really fun to explore it. And it's I get a lot of enjoyment, just the psychological side of it. It kind of cleanses the mind. It allows you to kind of turn things off for a bit and then come back refreshed,
Mm-hmm.
able to do some productive work or spend time with family or whatever it might be.
I think it's a secret sauce there. And I shared with you last time we spoke how I have this idea of staying out there until the turtles come up. And there's a bay where my wife and I like to surf, and a lot of people tell us they have never seen a single turtle in that bay. And we sit there between the sets, and they come up, and they're curious, and they look at you. And there are places where they grow them, let them be born in captivity, and they release them so they're friendly with people. These are not. These are wild turtles, and they still come up and they spend time with you. But I think they sense your energy, and they know if you're at peace, you're calm, you're probably more likely a friend than a foe. And they want to share this moment with you. And it's very precious. So between the waves, as you're waiting, magical things happen.
Magical things happen. And the turtles are special, aren't they? Like,
They are. They are.
oh, I love being in the presence of turtles. It's sometimes when we're foil surfing, or you sneak up on them because
Mm-hmm.
you're going pretty fast and you're pretty quiet on the water, and you're like, oh, see you there. One of my favorite moments when we are down south is waiting for the aribata. The aribata is the arrival of the olive ridley turtles,
Mm-hmm.
and these are female turtles that some of those turtles have not been back to that beach since they were born,
Mm-hmm.
but they were born on that beach, that one very small stretch of beach. And for some nature's great mystery, they are able to travel the world, and when they give birth to their first babies, those first eggs, they come back to the same beach,
Mm-hmm.
and they come as a flotilla, right? You have sometimes hundreds, thousands of big mother turtles that are coming onto the beach, laying their eggs, and then a month later, gestation period, these tiny ones are just all born. And I remember surfing out front one day. It was just around the hatching of these turtles. They're on the beach, and I'm sitting there on my surfboard. I'm like, what is that on the nose of my board? And it kind of, a wave kind of like brought up this little thing, and I looked up, and it was a little baby turtle sitting on the nose of my board looking at me. And I was like, this is incredible. Like, nature is so incredible. So I love spending time and seeing the turtles.
You and I talked about a special book, The Blue Mind. I don't know if you remember. It's a beautiful book, and it's by Wallace Nichols, and he tells stories of the importance of the presence of water in our life. And he tells the story of a little boy that has never seen the ocean. He actually is some sort of a charity. He brings kids from villages somewhere in the US, far away from the ocean, and brings them to the beach. And they put a snorkel, a mask, and they go look at the ocean for the first time. And there's a story that always, it gives me goosebumps, of a kid that cuts off the bottoms of his jeans and goes in because he doesn't have proper shorts. He puts his face in the water. He comes up and he says, "I don't see anything." And then Wallace tells him, "Open your eyes." And he goes back in, and he's gone for hours looking at what's the life in the ocean. So it's a beautiful book, but it makes me realize how important the ocean is in our life. And you've been so lucky to have had the ocean so close to you all this time. But I think it shaped you in many ways. And I think it's your refuge and a place to collect thoughts. And I come back from each of those sessions with an idea. And when people tell me, how much time do you work? I mean, how do you count it? Like, I'm sitting there looking at the turtles and something pops in my head and it becomes an article, or, it solves a problem I've been pondering for a while. So our mind works in funny ways. It's not a linear machine that has an assembly line and gives you the output in a regular way. It's actually, there are those exponential moments where a leap happens. And
got it. You got it. The great writer, one of my favorite writers of all time is Cormac McCarthy.
Mm-hmm.
Cormac spent a lot of time at the Santa Fe Institute the last 25 years of his life. And one of his interesting questions that he would ask was just that power of the subconscious, and studying these epiphany moments across time, scientists, writers, and you need to give yourself a portal to tap into something, a much deeper intelligence than your conscious mind has. And I think particularly with phones and screens and so forth, is our mind is so active, and it's a linguistic mind, right? We're thinking in language, and Cormac, there's a wonderful unpublished manuscript that I discovered this year that Cormac wrote, and it's called On Whales and Men, or Whales and Men. It is the most beautiful piece I've ever written of Cormac's, ever read. And I know some of your listeners are going to grab this right away, and they should. And he really keys in on this idea of the linguistic mind versus the subconscious in such a beautiful way. But I think the ocean, everyone has their thing. It could be in the shower, but being aware, can I tap into this infinite intelligence, this collective unconscious that's aware? It's a symbolic language. It's a artistic language. We were traveling 2 weeks ago, and we were in the Louvre, and just walking around a museum and seeing these archetypal symbols that we've used for 5,000 years. We were in the Egyptian wing, and my son and I had this great little game that we created where we were looking for this one particular symbol that is meaningful to both of us. And we were just looking all around these hieroglyphs, 5,000-year-old hieroglyphs, and finding the symbol. But every time I'm in the presence of that symbol, I think of the connection through time to what that symbol meant. And it's an archetypal, right? And oftentimes it's something that's deeply ingrained in us that can lead to these epiphanies, to these insights, if you allow a space for this creativity to happen.
I love this on so many levels. First of all, I feel like there's so many things that are very hard to express just with words. Yeah. And that's one thing. And then a lot of actual thinking or even dreaming, imagining, it's not happening with words and text. It's almost, a feeling. We just smiled about something. Why did you smile? And we use the rational brain to explain, well, I smiled because I got a raise, or I smiled because my stock went up. But no, there's a certain wave of emotion that happens and we might not know. And being in the ocean is one of the places, I think the experience with art can also make us feel things. And you brought up Egypt. As a kid, I was obsessed with Egypt. And I had all the books about Egypt, and my parents ended up taking me to Egypt when I was a teenager. And And I loved it. I was mesmerized. And living in New York, my wife and I, on Friday evenings, we would go to the Met. They had music upstairs. And when you're going to be in New York and you have a Friday, I highly recommend it. I think they resumed it since COVID. But she would always know we have to stop by at the Egyptian wing, even for a moment. There's something mesmerizing about the fact how advanced people were, 5,000 years ago. And if you read some of their writing and forget for a second how old that text is, it's so relevant to today and how they thought about things. And they're very, mystical, and in some way they're almost like self-help, guidance, how to live a life. There's so much deep wisdom in those old texts.
Incredible. The hieroglyphs were both a symbolic language, as we know, as well as a phonetic language. And so when we translated, Sir Thomas Young kind of broke the code when he discovered that the hieroglyphs that were in this circle, or what was called a cartouche, were actually proper names. And so this Thomas Young, who figured out that light is both a wave and a particle, also kind of unlocked the Rosetta Stone. So there's a great book that The Last Man Who Knew Everything on Young. That's I think it was maybe thinking about codes that I really dove into hieroglyphs in a deep way, and it's a beautiful language that bridges these two realms, right? Of the archetypal symbology of our unconscious with the phonetic, linguistic conscious mind, and I think there's something there. It's something that I continue to explore. Crazy enough, when I went on, a dear friend of mine from Europe, they keep kind of nudging me to read this book called The Meditations on the Tarot. And I said, why do you want me to read about the tarot cards? There's some, kind of parlor thing. But I had this book, a really thick book, and I'm like, William, this is William Oliver, and he's good. And he's like, Chris, just read it. I'm like, all right, I trust you. And so I bring the Meditations on the Tarot with me, and lo and behold, he was right. This book is one of the most beautifully symbolic pieces of research on these 22 major arcana. And what those symbols and cards mean, I thought they were trying to be fortune telling. No, it had nothing to do with that. It was basically a portal into the subconscious archetypal mind that Carl Jung talked about, that these symbols are like mythologies, are metaphors for universal general principles that all of humanity is working with. And so this anonymous author, by the way, wrote this book because he didn't even want his name to interfere with what he was trying to communicate through the book. So something surprised you. In that case, a veil kind of all right, I could see what this is.
It's remarkable that on this search, the learning journey, we find answers or directions in places that we didn't expect. And I think that's the lattice work of mental models that Munger talked about, that don't look for the answer just in one field. Keep on looking in different places. And I know you're also a fan of the Art of Learning book, which I loved. Yeah. And I believe you're friends with the author, if I'm right.
Yeah.
And he writes about the presence, deep focus, calm as the essential quality for mastery of any skill. And I thought of it because you talk a lot about those moments where you commit yourself to a particular topic for a long period of time. Many of us don't have that luxury, and you create that space for you. And I think there's some magic that happens when you can do that.
Yeah, I love Josh's book, and it was the way that him and I met and built a friendship, which then led to some of our arts, our love of surfing and water. I developed a learning practice to help solve for what I thought was my weakness. And I think in my early years of learning, I had a kind of a tendency to want to know a little bit about everything. Right. So I had the dysfunction on that is ADD. You're kind of like jumping around, you're reading whatever the latest book is, and this person said, read it. but I would just have the skim level of knowledge on a lot of stuff. And I said, I didn't like that. I wanted to deepen that experience, right? So I wanted to have depth and breadth.
Mm-hmm.
So I developed a system where if I spent a greater period of time, in this case, I spent 3 months on one subject, I was able to leave that 3 months with a real fluency and depth of knowledge. And so my one-dimensional thinking became two-dimensional. And over time, that is compounded, right? I've been able to, really have a methodical way that I choose a subject, go deep, change subjects. The subjects find me. I have a long list of things that I'm curious about. And all of a sudden, it'll just kind of nudge me to say, okay, go down this path, and I'll go down the path. But the third dimension is this idea of height.
Mm-hmm.
And we talked about eternity. When you see things from the beginning to end, when you see the whole scope of that through time, if you're looking at a business, you want to start at the beginning and read to the end. But also, I link everything I'm doing.
Mm-hmm.
If I'm thinking about physics or thinking about chemistry, biology, it exists on a timeline of eternity.
Mm-hmm.
And it helps me kind of zoom in and then zoom out. And so seeing things in the aspect of eternity, I see how this fits. And even the case of like today, we have a very political environment. And you could say, okay, this is what this person's saying on the left, and this is what this person's saying on the right. But if you zoom back and you look at the beauty of the distribution of what's at work and what makes the democracy work, it's beautiful. But you need to have this kind of perspective change. So I call that three-dimensional. The fourth dimension is to kind of see things through how a graph might be at work, and that's a bit more of a longer conversation, but I kind of see things with regard to the node and edge of how information is moving across a graph. And then the fifth dimension is diving into the subconscious, and we talked a lot about that today, is kind of taking this much larger intelligence than we're just aware of in our own learning, conscious learning, into a deeper understanding of the subject, that by way of this, whether it's collective or internal. So it's been a fun journey, and that's my art of learning, and the evolution of that has been so profound. And having an architecture, a scaffolding for which information can now come through me and stick. And I use memory tools. I use different mechanisms so that as I'm consuming information, that the most important of that information has a way to have a shelf life that's long. And that's hard to do, because it would be like, take it in, and I lost that. And I don't want to lose the important stuff. So I need to have a system, a memory system that I have found that I like to have it available to me at all times. I don't want to refer to some database in my computer. Like, I want the computer to be here. And so committing things to memory has been really important to me.
Well, I think you answered my question, but I was wondering, I know that you have a clean desk. You have a policy that I do of having a clean desk. So it has to go somewhere. And I realized that I read so many fascinating things that I have to remember where I found them. Like, I remember quotes from books, and I sometimes don't remember which book, because I'm reading 3 or 5 or 10 at the same time. So I've been getting better about at least writing down on my computer in a database, so I can go back and re-explore something that intrigued me at the time and go deeper. But the last few years, I've been making a real effort, because I feel like I might be losing something in the process. Like, new things replace the past, but they build on top of each other. And sometimes it's that compounding happens, and I might not know what started this long thread that took 6 years, and I'm writing an article. But I'm thinking, this article took me 2 weeks to write, but I really started thinking about it 6 years ago when I had a conversation with Chris, or when I had a conversation with somebody, right? So I'm trying, and I'm curious. It looks like you're trying to remember all of it at the same time in your mind, which is quite a feat.
It's quite a feat, and it's not a perfect science either. But it's I think journaling has been a real unlock for me as I'm going through a process of learning new material. I'll digest it. I have my journal. There's a process with which during the learning process that I'm trying to make it my own.
Mm-hmm.
And when you make it your own,
Mm-hmm.
it has this way of being so much more memorable,
Mm-hmm.
right? And I do this by way of acronyms. I do it by way of creating art around the subject.
Mm-hmm.
Um, I use geometric shapes. So on like a hexagon, which is my favorite shape to use,
Mm-hmm.
I will have each corner of the hexagon is actually representative of this memory tool, and it kind of gets me and I go there right away.
Mm-hmm.
And then with each one, I can kind of just double click, and there's another kind of information that opens to me on that particular idea. And I used to think I was like, oh, I'm not going to tell anyone about this because it's kind of weird. But then the more I thought about it, I'm like, oh, it kind of works really well. And now I just kind of embrace it, and it's fun.
When I'm listening to you, I'm thinking of general semantics. Have you been exposed to those ideas? Chris Mayer, who wrote the 100 Beggars book, he wrote another book about general semantics. And it's a whole field that was inspired by Alfred Korzybski, who was born in Poland 150 years ago, moved to the US, kind of became a philosopher. And he was using physical objects to present ideas. But also he spent a lot of time on labeling things. How do we label things? And one of the things from the book is using the language, right? English, without the absolutes. And it really struck a chord with me because so many times in a conversation, even a casual one, we say, nobody goes there anymore, right? Or everybody wants to have a house there. Like we're always talking in absolutes. Or a value investor would never buy that stock, right?
Yeah.
And then we realize the life that we see is much more nuanced. And we talked about how the minute you tried to define quality, you probably misunderstood the idea. But I thought I'll bring it up to you. And I don't know if you're familiar with that book, but I think you would.
Everything.
I
I
think you.
think I would love it. I feel
I
like I
think you would.
intuitively know it already. When Persig ended his book Lila, he kind of alluded to this. He said, if I could tell you what quality really was, like what would the word be? And he said, I'd probably say it was good.
Mm-hmm.
But he said good as a noun,
Mm-hmm.
meaning good not as an adjective, but a good. And like, so then you're like, what's a noun? Well, it's a person, a place, or a thing, right?
Uh-huh.
And so what I took that as being is like, good was somewhere on that leading edge. And that ultimately is what we're trying to be. So the veiled truth,
Mm-hmm.
like it's veiled if we label it, if we categorize it.
Mm-hmm.
But when you unveil the truth, that you realize the truth is, it's something that's quite dynamic. It's moving. It's manifesting.
Mm-hmm.
And that's what I think great critical thinking is. And that gets back to like, don't converge to an answer, but diverge through paragraphs and ask better questions.
Mm-hmm.
I was with a great person, 15 years at Amazon, very involved in the data centers, and he kind of shared when there's a mistake at Amazon, they ask what's called the 5 whys. Like, why did this occur? Okay, you might have an answer, the team might have an answer. Like, okay, what's the second why? And you keep going back, and you keep asking why until you realize, oh, that was the real reason it happened.
Mm-hmm.
It's a deep level of inquiry that you're willing to do, and sometimes it's humbling, right? Or if it's a personal failure, it's you really have to get to the heart of it, and then that's where you can really create change. Like
Mm-hmm.
you have real learning there, and so I like that, and that dynamic quality and the idea of Cormac investigated this, and he was talking about whales and that whales and men,
Mm-hmm.
and he said the whales don't have secrets.
Mm-hmm.
They're not a linguistic, again, he doesn't know for sure, right? But I think about those whales. We were on a whale watch, out looking at whales a couple of weeks ago, and and the whales don't have secrets. They're communicating by sound, pod to pod, node to node. The edge is song. It's sharing. It's dynamic. It's a dynamic, traversable graph in real time. I think language, when we language the world, we kind of arrive at something that's quite filtered and static. And we're not going to get rid of language, but being aware of both its possibility and its liability to try to find a deeper sense of truth. And whenever I find myself having a filtered understanding of the thing, I kind of pause, right? I pause and reflect. I'm like, no, you don't. You don't. That's not, you're filtering. Like, step back, think about it more critically. Ask some whys, right? And get to the heart of it.
I love the sound of it. And I'm thinking, English, it's not my mother tongue. I don't remember not speaking it. I learned it when I was young, but it's not my mother tongue. Polish is. And I learned French on the way, and I went to school in Paris and studied in French. And I learned, as many people do, is that the languages are not exactly the same. So if you want to say the same thing, especially a more nuanced thing, it will be expressed differently in different words, in different languages. And we kind of have to accept it. And at the beginning, it's irritating. It's even frustrating because it's not exactly what I meant. But this is as good as it's going to get, right? It's the imperfection.
I think about that all the time. One of my favorite philosophers is Heraclitus. And Heraclitus, the body of work is incredible. Like, what a dynamic thinker. Except we only know his work through the fragments of his work. And when you really give yourself an opportunity to go deep on something, there's a great thing called the Gell-Mann amnesia effect. And the Gell-Mann amnesia effect is when you become an expert on something and you hear someone talk about something, you realize they don't know what they're talking about. But on the next subject where you're reading about something and you just assume that person's an expert. And so it's this wonderful reminder. And this happened to me with Heraclitus. The deeper I went on Heraclitus, I would read translations. I'd be like, that is the most horrible interpretation of what Heraclitus was saying. And they were just translating words. But think of everything that we've read through a translation.
Yes.
And news is a translation. And they're translating something that happened based on a narrative to try to share it maybe through their perspective or their lens or their language. And how much is lost in this? So Gell-Mann amnesia effect is one of my favorite reminders of how this thing is being translated to me that may be further from the truth. And if I was an expert in that thing, how would I interpret it? So my quest with Heraclitus was to find the best translator, probably Kant, and get to that truth. And I think Ben Graham did this too, right? He's like, I can't stand these translations, therefore I'm going to translate it myself. Good for him.
That's the next step for you. I was reading not long ago a world history book. I'm forgetting the author right this minute, but it was a different history book than any other I was reading, because at the beginning, he makes history I would call it the hero of the book. He says, how do we know? Like, what do we actually know? And, we know about the Pompeii and the volcano and the explosion and the city disappearing. There was somebody actually witnessing the event, wrote it down, and Pliny, and the older or the younger, I never remember. And then we know from that record, but there's so many battles, so many moments in history that we know because somebody wasn't even there. They recorded it 100 or 200 or 1,000 years later based on what people told, the tales and the stories. That's why, we have some books from the past, like the Odyssey, where the gods are mixed with an actual war that probably happened in a city that really existed. I'm thinking, of Troy. And it gets very confusing going back to what you said, finding the truth. How do we know? And in investment research, stock research, people tell you this is good news. Well, tell me more about it. Like I want to see the source. I want to see the filing. I'd love to see the CEO tell me about it. I'd like to get to the person that actually saw the volcano, right? Like
Yes.
that's the research process.
By the way, I was just recently in Naples, and I was looking up at Vesuvius, just and thinking about that volcano in 72 AD, I believe it was, and just taking it all in. And one of my favorite artifacts from that volcano was it was the oldest versions of what is known as a Sator square. And a Sator square is this wonderful kind of palindromic structure. And everyone was curious, when did someone create the Sator square? But we know it to be as old as that volcanic eruption because one was found in the ashes. And so I always remembered, but the Sator square is this just wonderful symbolic piece of art that has a lot of great meaning behind it. But it was you bring up just a great reminder that history is written. What is it? The saying is that history is written by the victors.
Yes,
and I think Elon expanded it. History is written by the victors unless they have enough time to edit Wikipedia, which is true.
But, even living history, as we watch it, there are opinions about what's happening, right? Whatever event you want to take on. So even today, we both lived through COVID. I can give you my account of the experience, but it's not the only account of the experience, right? Like, so whenever you want to learn, and 50 years from now, somebody will want to ask, what was it like when the whole world went to a lockdown for the first time in modern history that I know of? And what was it like? And there's not one story. If you were a doctor and you were called in and you were serving in a hospital in New York, you had a very different experience. If you were an investment professional like I was with a laptop, I closed my laptop, left the office, I had a completely different experience, right? So it's very tricky when people say history. What do you mean? And
you lost a loved one.
Yeah.
You're exactly right.
Mm-hmm.
Exactly right. And I think now, this quest for the meaning of truth for me is very topical today because I think that there's a lot of people questioning where are the sources of truth. Who can we trust for being our communicator? What's the medium with which we can consume truth? And it feels more polarizing today as oh, this is the truth from the right, or this is the truth from the left. And I remember growing up where you could put on the news, didn't matter, it was ABC. It was kind of all the same. And you're just kind of like, I like this anchor better because he's going to, but it wasn't as perspective oriented as it is today. So I find like to search for that truth is harder, and it requires more work. It requires more judgment. And that's okay, but it's different than what we're used to, right?
Takes a bit more work. So I had a completely different experience growing up. I remember the last decade of Cold War Poland and communism. And when you turn on the TV, it was all lies. All of it. Wow. How successful Poland is, how they will repeat again and again that Germany is getting ready to attack Poland. And obviously the Western world in general is just ready to invade and so on. So there are all kinds of things that I heard that people knew are not true. So I always thought that I have to do my own digging to find the truth. I never turn on the TV thinking, oh, I think this is exactly what's happening. And I think it helped me in investment research. The CEO tells me this was a good quarter. Let me look at the numbers. Let me decide what it means, good or bad, and let me decide how. But we do make a lot of assumptions in the system we operate in. You and I are opening a filing in a 10K. We assume that the numbers are fairly honest. we assume that somebody audited it. And I know we got burned in it with that in the past. And Enron was a prime example when I was going to grad school, and it was on a lot of people's minds. But we do assume that we, as minority shareholders in publicly traded businesses, especially, well, in the US, in a handful of markets, I would say, we'll be treated fairly and honestly. And the numbers we're shown are audited and as close to the truth as possible, however we define the truth. But I like to remind myself that this is an unusual set of circumstances that we get to do this in this way.
Beautiful. And you're exactly right. Is when I go to the source material, which are the public filings for a company, there are reasons for why that should be closer to the truth, because there are criminal implications if you do not tell the truth in those things, and that's great, because I can look to that, and the CFO is signing it, the CEO is signing it, and like, unless they want to go to jail, we're going to read some truth here. Versus if I'm reading a sell-side investment research piece, well, that's opinion, right? We know those are opinions, and if my analyst comes with a headline, and I get headlines all the time in our companies, and it's an immediate, I'm like, okay, what distorted sense of truth is this headline? And the more publicly known your business is, everyone's going to have an opinion or a headline that wants to counter maybe the company's advantage or something else. So you're constantly being bombarded by this, and you need to have a way to source the truth. Like, and what is the data source? What is the KPI that I can measure that I can refer back to and say, no, okay, I feel good about this. We own a fire retardant business, and great business, and protects, wildlife and trees and things like that. And, one of the key things that we need to keep track of is what is the KPIs on the acres burned. Like, where are there fires? What is happening? Are they in the regions where our retardants needed? Can we get that retardant to bases really efficiently and fast when it's there? And so these are all problem sets that are interesting, and they flow into kind of the real dynamic of the business and how it's doing, and it's fun, right? As you experience, is the deeper your fluency on a business, it's as if you are part of that team. You're and that's a cumulative thing, and it's why I've gravitated to concentrated long only investing, is because I really can't do that with 50 companies, but I could do it with 10. I could do it with 8 today, and where you can develop a deep fluency, understand things at a level that maybe the management team is thinking about. You're in their mind space as far as what are the drivers that they're thinking about. And I love that. I love that.
I want to ask you about your definition of success, but before I do that, there's a word that comes up in many of your conversation, which is freedom. And I really like that word. It means a lot to me. And you share how the essence of everything that grows lies in its freedom. It's a powerful statement. Could you share more?
Thank you. Yeah, in that search for how does the universe work? Like, what is the true nature of the universe? I keep asking that question through life, and I kind of arrive at this, abstract idea that everything is information, and information tends to cluster. It clusters in the form of universes and galaxies and planets and individuals. But ultimately, the information is seeking to do something, and that is to grow. It's to grow, it's to survive, but also to grow, to replicate. And, so what is at the heart of information is entropy, right? So we reduce entropy, we increase information through a system. And when we do that, we create value. When we create value, reduce entropy, we actually create entropy somewhere else. So there are second and third and fourth order effects of this natural upstream manifestation. But ultimately, information seeks to be free, right? Information, we as individuals, which are clusters of information, love freedom. And so I wrote that down. The essence of everything that grows lies in its freedom. But then I added something to it. I said the essence of everything that grows lies in its freedom and its unfreedom. And so an unfreedom is what builds resilience. You know, when you think of you take on a partner for life, there are certain unfreedoms you're agreeing to. You know, but you build resilience. And so an arch is a great architectural marvel, right? Because Da Vinci said that, you know, the definition of an arch is two weaknesses that come together and create a strength. And, you know, freedom and unfreedom, you know, freedom to grow, also you need the unfreedom to create an arch with which information can flow through. And that's the beauty of, I think, what we see in nature is this constant freedom and unfreedom that's at work. Too much freedom leads to death. Too much unfreedom leads to death.
Right.
And we see that in nature all the time, right? A tree that grows too fast will just topple over versus a coastal redwood tree, which lasts thousands of years, has unequaled access to light, 380 feet tall on a coastal redwood, grows fire retardant bark. So it can handle wildfires, it can handle insects. It can, you know, so all of these things that are just freedoms and unfreedoms. And if you're really interested in duration, you can't go too fast, right? You got to play an infinite game. Think about long duration, add lots of unfreedom that can grow deeper roots, do things that are going to be, you know, take a longer period of time. But that's, so I'm glad you brought that quote of freedom up. But I love the counterpoint to the unfreedom and the balance and the arch that's at work there.
There are moments when probably we have too much of the lack of freedom or unfreedom that gets in the way, and in so many different ways. But it's fascinating because when you think of a business, and I like the tree reference because I see businesses as trees. You know, you plant this little seed and somebody's really passionate about it, becomes something bigger and bigger and bigger. But it's the moments of distress when you look back that make that business better. And the most recent, 4 years ago when we had the pandemic, for a lot of businesses, it was a massive shock to the system, especially if you were, for everybody, but especially travel related businesses. And you could tell how many of them went back and they redrew their cost structure, how they run the business, how they treat the customer, how they respond to things. Looking back, I think of some of them, and I'm not going to mention any specific one, but had that not happened, they would have enjoyed yet another easy year and grown in ways that might have been not the most productive, right? So it's bittersweet. It's the silver lining, however you want to look at it, but it allowed them it didn't kill them the same way the dot-com bubble did not kill Amazon, although it lost 98% of the stock price. I don't know what the value was, but the stock price dropped. But it made Amazon a better business back then, 25 years ago, 24 years ago. And I think the last 4 or 5 years, we've seen some businesses that really got better because of the massive stress.
It's absolutely true. And I think that, what could you wish on your children? You want your children to have this very carefree, you want to protect them. You want to give them all the opportunity. But if we really could look back at it, you want them to struggle a little bit. You want them to grow deeper roots. You want them to be resilient because in life they're gonna be challenged, and you want to make sure you taught them to handle adversity in a really mature way. And so I think that is with businesses too. Is how do you constrain resources so that creativity and anti-fragility and all of these things can manifest in a culture, in an organization. It's we ask lots of questions. One of them is, how do we lose? But we also say, where are the clouds? And we love to look where there are clouds that are distorting the long-term earnings power, duration, whatever is great about that business that's being obscured by cloud.
Mm-hmm.
And when COVID came, that was a big cloud. It was a big cloud for particularly travel-related businesses, aerospace businesses, and we kind of looked beyond the cloud and we said, what's going to be the same down the road? Can they get through this really difficult period? Are there debt covenants that they need to work through? We moved 25% of our capital to very, very clouded aerospace businesses.
Mm-hmm.
And so when there's not a lot of clouds out in the kind of environment,
Mm-hmm.
we know things are probably fairly priced to maybe a little overvalued. So it's every day we walk in, we're just trying to figure out where are those periods of uncertainty, obscurity that we can get involved in, look beyond it. The businesses are getting better, hopefully.
Mm-hmm.
And that's kind of a real fun part of the kind of long infinite game of what we're doing.
Mm-hmm. No, that's I call it the down cheap out of favor part of the market. So I'm looking for the good businesses, good management, good prospects. But usually those businesses are either fully priced or overvalued. People get too excited about them. That's the nature of the stock market, public market. But then there are moments when the time horizon shrinks. I don't know if you're familiar with Peter Atwater and his Confidence book, where he talks about the shrinking time horizon. When we panic, when we get uncomfortable, we actually are uncertain about tomorrow. So COVID is actually a prime example of that. We didn't know what tomorrow will look like. Now, there are times like the year or the 2 years after the depths of the pandemic, when the market was flying high, we had all kinds of manias happening, fads happening. And then the horizon seems to be unlimited. People can commit capital forever. They are betting on things that might never happen. Let's fly to the moon or to Mars, right? Like all kinds of things became possible. So it's a fascinating dance. But if you can find an opportunity where people are so obsessed about a short-term issue, and you do find that in the public market that a stock is down 30, 40, 50%, and the valuations are compressed, it's an entry point. I have a related question to that since you brought it up. I look at your portfolio and I look at mine as a collection. You have a gallery and you're picking up, a Monet at a time that belongs in that gallery. There is a certain challenge with new money coming in. A client wants to show up and brings you, 10 million, 100 million, whatever it is. And you have a choice. Do you put everything exactly in the same holdings that everybody has had so far? Do you wait? How do you think about it? Do you have some flexibility on that front? Because some of those Monets might be overvalued for the time being, at least. How do you think about it?
Yeah, it's a great question, and there's a theoretical and then the in practice answer to that. We run a commingled vehicle, so we have a fund where a new infusion of capital would be, and in this case, it's a fund that you'll have taxable investors in there.
Mm-hmm.
So what is in essence happening in this case versus say a separate account is your cost basis is being sold down, right? You own less of those businesses depending on the amount of the deposit. All else being equal, if you love the portfolio weights that you have, if they're perfect in your mind, you may say, well, I want to own the exact portfolio weights. They're perfectly optimized. But you may own something where you have a large unrealized gain and you're like, the IRRs come down. I may, with this cash infusion, use that as a non-taxable opportunity to just keep that at a lower portfolio weight. So that's kind of something that in practice, I think any thoughtful manager would kind of look, okay, what are the IRRs is how we think. What are the IRRs of our portfolio? What is most deserving to reweight in the portfolio? Do we bring things up to where they were before? Or do we make some adjustments that are tax advantage for everyone? That's kind of how it's done in practice. We're very careful about fund flows. We'll only accept capital when it's not going to be kind of a deterrent from the returns, and we've limited our growth in a major way because we've decided early on that we didn't want to build a large asset management firm.
Mm-hmm.
We wanted to have a world-class track record, grow our capital alongside a group of outstanding partners, and to be with them for decades. Over time, AUM would take care of itself, but we're never going to sacrifice taking a marketing meeting, going through a due diligence process that may take 10, 15, 20 meetings.
Mm-hmm.
So much time away from what we love to do, which is research.
Mm-hmm.
Just going to choose not say no to those and just allocate our time really to things that we think are going to produce great returns over a long period of time that we're really proud of.
I like the sound of that. Yeah, it gets tricky with inflows and outflows, and ideally you would like something that's as close as possible to permanent capital. I jokingly call it the forgotten money. Like, somebody asked me who would be the dream client. Well, the forgotten money of that client is the best participant in the investment style that I like, because if they need it for a house or a car or a trip, that's not the money I can invest for the long run. Yeah. So in a way, in a playful way, obviously, I call it forgotten money. Could you forget it for 5-10 years? That's the money I'd like to invest.
Or it's generational, right? Someone who's accumulated, they've had an amazing amount of success, and they know that they've accumulated this and that it could go to future heirs, maybe generational, or it's a charitable end goal. Those are really great partners that we love working with. Because it really aligns. We think our only advantage, not only because certainly the work we do is, but we think the durational advantage, time horizon, is the most important that we want to lean on. And when we look at these short-term clouds obscuring long-term value creation, that's the sweet spot, right? Because naturally the human psychology of the market is short-term. It has to be, right? And so the really one you want to lean on is the time horizon arbitrage. You're going to have informational, you're going to have synthesis and all this stuff, and it adds a lot of value. But the time horizon one is the one that always rings the cash register, at least for us. And I think Warren and Charlie has been that way as well. So, just knowing that is really good. You got to have good partners that way, long-term partners.
Making sure that the client's time horizon is the same as your time horizon.
That's right.
Very important.
We've done a good job. We've really been able to align interests and set expectations early on when someone might, inbound comes in, or it's a referral. We really try to do a fair amount of, understanding so that the expectations are set and that, I'd say 90% are probably not good fit. So we're kind of aware of that.
But if it's a good fit, it's a very enjoyable journey for both the manager and the client. Chris, I could keep you here all day. I have one last big question. How do you think about success? What's your definition of success?
When I look at someone who's been very successful, and I'll point to Warren on his birthday. Right? It's his birthday. Todd Combs said, what was the most surprising thing when you started working for Warren? He's like, his calendar is completely his own. He's like, I looked at it, he had a few lunch with me, and here's one of the wealthiest people in the world, and his calendar was open. And, as I reflect back on my first, 25 years, I would not trade X amount of net worth for the freedom that I have of my time. And that's my most valuable resource. And it continues to be my most valuable resource. So a definition of success for me is to have the means to do the learning I want to do, to have the financial freedoms and comforts. But my time, the value of my time is worth so much to me now. Like, would I trade it for 100 million or 200? No way, right? I don't know if there's a number. Like, it's so valuable. And to do the things that we talked about, spending time on the water, spending time with family, spending time researching, both the work researching, but the crazy vectors of learning that I love to do, like that to me is real wealth and it's real success. But it's hard to do because every once in a while there's a carrot that comes along and says, "Come do this with me," and you're like, "All right, that's going to require a lot of my time." And I think having the awareness to say no is to me. So I see that it's something that I've modeled for myself, but I see it in others when I look at success being that they really have the ability to control their time. It means a lot to me.
It's so precious, and you probably wouldn't be surprised how many of my conversations here on this podcast, we start talking about money and investing, and the last thing we talk about is actually time. People say at the end of the day is, do I have the time to do the things I love? And there's no money that people are willing to sacrifice for that. You know, that afternoon out surfing, having a beautiful day, and how much is that worth to you? It's absolutely priceless. You know, it's memories for life. So I think that's a great reminder of what really matters.
You are a professional question asker. I really admire that about you. Thank you for having me on and sharing this time. It was really, I'm grateful for it. Thank you.
Thank you, Chris. It was such a pleasure. And I'm looking forward to many more conversations. But thank you for today. It was such a joy.
Thank you.
You were listening to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest subject of all, money. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. If you enjoyed the show, please take a moment and follow, subscribe, rate, and share with friends and family. We rely on word of mouth to promote the show. One click for you means the world to us. Thank you. Until next time, your host, Bogumil Baranowski.